All right. Hello again, everybody. This is Mike Rixey. I am the lead options instructor for NetPicks, and this is our options midweek update. In this video, I want to highlight some general thoughts on the overall market here. We've had a very active week so far to start the week. We've had pretty big moves in both directions, which we'll talk about in just a moment. Also take a look at some trades that we've closed out of so far this week, and then also take a look at some trades that are setting up for the end of the week as well. So let's start out by taking a look at a daily chart of SPY. We've got a variety of different moving averages posted here, just a mix of simple and exponential moving averages, nothing overly complex there. And when you're taking a look at these moving averages, I'm not looking for entry and exit points. What I'm using this daily chart for is just to gauge overall market sentiment. I'm looking for overall direction, big picture. We then narrow it down to some of the individual stocks that we trade. We also use the 195-minute chart to time our entry and exit points. We'll move there next. But looking at this daily chart, you can see coming into this week, we had seen some back and forth movement. We started the week, we saw a pretty decent sized gap to the downside Monday morning, and we found support right on top of the 89 exponential moving average. We've also got the 100 period exponential moving average here as well. Those are the blue lines on the chart. We found support there Monday, spent most of the afternoon rallying higher. We then saw another rally here yesterday, and I saw numerous articles and numerous tweets yesterday. Everybody talking about the low is in, the dip is to be bought here, and we're going to head right back to the upside. Fast forward 24 hours to today's session, and we saw a sell-off right back into these key support levels, right on top of the 100 and the 89 EMAs. Those are the lines in the sand here over the next few weeks. Should those levels break, it could be a quick shot down to the 200 period moving averages down below. Between 310 and 313 would be the next area of support. So there's a decent little air pocket there should we break some support levels going into the end of the week. On the flip side, let's say that those support levels hold and we head back higher. We do have an area of resistance. We talked about this in one of our previous videos. Now that we have broken down through these moving averages, all of these up top become areas of resistance. There is a window there between 332 and 340. There's an area of resistance. It's going to be difficult to break back up through those levels. Here's why I say that. Any type of a rally that we've had here lately has come on lower volume. If there's not conviction behind the move, if it's not a broad-based rally, it's going to be difficult to break up through those levels. What I want to see happen here, ideally, I would love to see another push to the downside. Here, one more push, it would be great to test those 200 period moving averages. But in the near term, I would expect here over the next couple of days, at least an attempt at a bounce. Whether it's sustainable or not, time will tell. And here's why I say that. My concern, yes, we saw the VIX higher today. We saw volatility up almost at 30 today, but it wasn't at the panic rating. We didn't see those panic type ratings on the VIX. That's concerning. On the volume side, we saw 93 million shares trade on SPY today. That's a good, not great number. This was not a session where you saw panic get me out of any price action. Okay, we saw very methodical movement for most of the day on the downside. Normally when you see that, I'm not saying the low is in, but you'll typically start to see a bounce very soon thereafter. And we'll see if that happens here Thursday into Friday. If you take a look at QQQ, we did break some key support levels again today, and we've just kind of been pinned between these moving averages again, between the upper level of moving averages, which we talked about on SPY. Same holds true for QQQ. We have some overhead resistance there. And then on the downside, the blue lines are 89 and 100 EMAs. Those are areas of support. I'd love to see those broken. We continue to see every sign of weakness in tech has been bought up pretty quickly. Now we're starting to see a few more cracks here develop in the tech sector, and we'll see if that leads to anything going into the end of the week. The volume, again, good, not great. It wasn't any type of panic selling here today, so it'll be very interesting to see what happens here going into the end of the week. I would love to see the volatility stick around. It's been a great stretch for us as options traders. We love to see the back and forth movement. A lot of times people talk about going to the sidelines, getting stuck, intimidated by the volatility. But as options traders, we really thrive in this type of environment. The environment that I get frustrated in is in the one-way movement. one-way move higher or lower. I want to see the back and forth movement on a regular basis. So it's been really ideal for us. So big picture, we are definitely weak. We are definitely oversold here in the near term. I could certainly see another attempt at a bounce off of these support levels over the next day or two, but I do expect before another big rally higher, I do expect the 200 period moving average to be tested on SPY, and we'll see if that holds true over the next couple of weeks. Let's also take a look at the 195 minute chart. This is typically the chart that we like to trade. This is where I time my entry and exit points, and you can see we've got our histograms down at the bottom. Our trend strength histogram is red, very much looking at a market where the bears are in control so far this week. However, our pulse indicator, which is the red and yellow histogram up at the top, you can see the last 6 bars have plotted yellow. Those bars indicate price has reached between a 1 and a 2 standard deviation move on the downside. It doesn't mean price action can't continue to head lower. It just means it's not statistically probable. Out of this type of a pattern, when you start to see a 1 to 2 standard deviation move, it'll typically lead to a sideways stretch, a period of consolidation, or even a reversal to the upside. If I were to initiate a new trade here over the next day or so, I'd be more interested in a neutral to bullish position on SPY. I don't think now is the time to initiate a bearish position, but looking at a potential neutral to bullish trade to play a bounce in the near term, I would certainly be interested in that type of a trade. And that's definitely on my radar here for the next couple of days. Looking at QQQ, we aren't as overdone on QQQ, but we are still looking at some yellow there on the pulse indicator. Again, indicating where we turn a 1 and a 2 standard deviation move on the downside. Again, not time to chase here. I do not want to initiate new short trades, new bearish positions on QQQ at this point. If you're already bearish, I don't have a problem staying bearish and staying in those positions. But initiating new trades, you'd be chasing at these levels. I would rather hold off, wait for a potential bounce off of these levels over the next few days, and then consider initiating a new trade at that point. So if I were to look at any type of a new position, I would be interested in more of a neutral to bullish type trade, potentially with selling a put spread. And we'll talk about that in more detail in just a moment. Now, some of the most overdone areas of this market, if we take a look at the financials, they have been beat up. You have the financials and energy really, really weak. The financials have been weak now for the last few weeks, even with tech trying to hang in there. What I could certainly see taking place over the next couple of days, potentially the next week or so, is a passing of the baton where the financials try to take the leadership from the tech sector and potentially lead a bounce here. They're all oversold. You can see on our pulse indicator down at the bottom, it has gone from red, yellow to now green. Those green bars there represent price action hitting between a 2 and a 3 standard deviation channel move. It's a very oversold condition. Doesn't mean price has to stop moving lower here. It just means it's not statistically probable for the price to continue at the pace on the downside that it has. Less than 2% of all occurrences will fall outside of this range. Out of this pattern will typically lead to a sideways stretch or even a bounce higher. The financials are one area where I am looking to nibble over the next couple of days on some neutral to bullish positions, potentially some short put spreads, and I'll highlight one of those trades here in just a moment. Looking at a couple of the other financials, JP Morgan, Bank of America, very similar looking chart patterns. They are all oversold in the near term. Citigroup is my preferred choice here because it is the most oversold out of the bunch. But any of these other financials, JP Morgan, Goldman Sachs, Wells Fargo, there's a lot of oversold conditions on the financials. That's one of the areas that is going to be on the top of my list here going into the next couple of days. Bank of America, again, I mean, you can see the last couple of weeks, we have definitely seen the financials roll over to the downside. They are all getting overdone in the near term. So that's one area that I'd want to keep an eye on for a potential move to the upside off of the lows. XLE, which is the energy ETF. Some of these energy names, very, very weak as well. I'm not initiating anything new here on XLE as of yet, but we did just today, at the end of the day, we got our first yellow bar on our pulse indicator. That's the first oversold reading that I have seen. Ideally, I want to see 3 out of the past 5 bars plot yellow. So we're not quite there yet, but we're getting close. This is definitely an area, well, there's XLE, or I like to trade Chevron or Halliburton, ExxonMobil. There's a lot of potential opportunity here to play a near-term bounce in the energy names. Here's Exxon, very overdone on the downside. And when I say try to play a bounce, I am not calling for the bottom in energy. I'm not saying that, we're going to see these things rocket ship back to the upside. What I'm talking about is over the next couple of days to the next couple of weeks, I could certainly see a short-term bounce in the near term that I would be interested in playing. All right, some of the metals. Let's take a look at silver and gold. Silver, symbol SLV, you can see did just start getting an oversold condition. We got 2 yellow bars here on the pulse indicator. If we get one more yellow bar tomorrow, that would also be my green light to potentially look at selling some put spreads there to play a bounce. And again, guys, I'm not calling for a buy the dip back up to the highs. What I'm talking about is a very short-term tradable bounce. I think you want to be nimble in both directions here. Now is not the time to load the boat with huge position sizes in either direction. I don't have a problem being bullish or bearish, but just keep your position sizes small. Try to stay as diversified as you possibly can, because in the grand scheme of things, anything can happen, right? GLD, very similar story to silver. You take a look at the gold ETF, getting a little overdone. Very much looking at a trend strength indicator where the bearish sentiment is in control. What I'm talking about now is, just like I mentioned earlier on some of those earlier charts, now is not the time to initiate new bearish trades. If you're already in those trades, that's fine. I don't have a problem holding those. It's just I don't want to initiate trades now because we're chasing. They're extended at this point. All right. And then finally on TLT, this is the bond ETF. We do have a new short trade setting up. This is one that I'm definitely interested in for tomorrow's session. The trend strength indicator did start to flip below the 0 line. It's a little difficult to see. It's just starting, but we're getting that rollover to the downside. And we do have this blue plus sign up at the top. That is a short entry point. I am looking for a potential new bearish position setting up. Let me get my data box up. I'm looking at 163.30 as a potential entry point. If that level's hit tomorrow, I'll be taking a look at buying some long puts. So the bonds are also an area that I would be interested in going into Thursday's session. All right, so just a couple of markets, couple of thoughts there. And I'll piece together, I'm going to walk you through a trade that I'm actually looking at here for Thursday's session. I'll jump over to the trade page in just a moment. Let's quickly take a peek at some trades that we have closed out here this week. Let me drag my spreadsheets over here so you can take a look at some of these trades that were closed out. With our NASDAQ Options Superstars program, we did end up taking what we're calling our overnight pop trade. Now, it's an overnight trade looking to take advantage of options expiration. We like to take those trades the day before an option expires. Normally, we have monthly expiration on the third Friday of the month. A lot of products have weekly options that expire every Friday. And then you have SPY that has options that expire every Monday, Wednesday, Friday. You've got 3 expiration cycles each week that you can take advantage of. What we did yesterday, we sold an iron condor looking for a neutral type trade. We sold the 332, 334, 326, 324 iron condor, and we collected 75 cents. We collected $75 per spread to put the trade on. The goal of this trade was for price to stay in between 332 and 326. The key to this type of a setup, when you're looking for an overnight trade into expiration, these options are very, very sensitive to changes in stock price and to also changes in volatility and time decay. Things happen very, very quickly. We will typically close these trades out within the first 30 to 60 minutes of expiration day. What we did this morning, we got a pretty flat open. I mean, it was a quiet open, and then the selling really intensified later in the morning. But we had a window there for the first 30 to 45 minutes to close out of this position, which is what we did. We closed it out for 24 cents. It gave me a $51 profit, $204 a profit if you're using our risk parameters, where you're risking $500 per trade. It gave us a 41% return on our capital. We are in and out overnight, less than 24 hours. Really, really great trade. I'm really excited about this trade type. I've been having really good success with it here the last number of months, and just a really great trade. Pinterest. We had a long call position on Pinterest, one of the stronger names in the market so far this week. Pinterest, we actually initiated the trade last week. We bought the 36 calls, $275 a contract. We closed those call options out yesterday, booked a $227 profit per contract, $454 of profit if you're using our risk parameters. That's an 83% return on our capital. Really, really great trade in and out in about 8 days. Uber, we had sold a call spread. Sold a 39.41 call spread. That was also a trade that we put on last week. Sold it for 62 cents. It's a bearish position. I just wanted Uber to stay below $39. Obviously, with the selling the last couple of days, helped this position out. We booked a $39 profit per spread. Again, $117 of profit following our risk parameters. That's a 28% return on our capital. And then finally on Starbucks, very similar situation to Uber. We sold a call spread, the 92.5 call spread. We booked a $56 profit there, $168 profit following our risk parameters. That's a 32% return on our capital. So you can do the math here, guys. I mean, you're talking about almost $1,000 of profit just on 4 trades, risking $500 per trade. Right? That's some really great profit there, right? What about our ETF service? We've closed out of a handful of trades here as well this week. We've actually closed out of 5 winning trades so far to start the week. XLB, we closed out of a short call spread, 42% return on our capital, $165 of profit following our risk parameters. EEM, also another short call spread, 22% return on our capital there. We had a couple of long put positions on EWZ and XLF. EWZ is the Brazil ETF, 38% return on our capital there, $136 profit. XLF, which is the financial ETF, $114 profit, 31% return on our capital. And then again on the SPY, that's our overnight bounce trade. Our overnight pop trade that we took on SPY. We just talked through it on the NASDAQ spreadsheet. So again, you take a look at the results of these trades and you're talking about it, another $600 of profit there, taking every trade with $500 of risk. That's been a really, really nice week for us. And then finally on our Simplified Options Superstars program, we close out of a 90% winner today on some IYR puts. IYR is the real estate ETF. So really nice trade there as well. So really a great start to the week. Some really great results. Just really enjoying the volatility, which hopefully, fingers crossed, that continues going into the next couple of weeks, which I fully expect it to as we get closer to the election. I think it's going to be a very active stretch in the markets. Let's take a look at Citigroup here. I mentioned over on the chart, we were looking at an oversold condition, right? The pulse indicator is oversold, as we took a look at here a few moments ago. I want to put on a neutral to bullish trade. I don't want to buy long calls here because price action has not confirmed to the upside yet. We have not seen a confirmation that price is ready to head higher. In fact, we have seen price action pretty weak. So I want to lean neutral to bullish. I want to be conservative here with this trade type. So let's go over to the trade page. We're going to utilize the October options with 23 days left. I don't want to go out to November with 58 days left because the financial names have earnings upcoming. I don't want to hold these positions through earnings. I want to get out before the earnings are released. So let's go with the October monthlies. Let's go over to the out of the money put options. The goal when you sell a credit spread is you want that spread to get as cheap as possible, as quickly as possible. That way you can buy it back at a lower price. Well, we're going to go to the out of the money puts. I'm going to go to the 40 puts. All right, we're going to right click on the 40 puts, go to sell and select vertical. Once I click on vertical, it's going to pop up an order down at the bottom of the page. By default, we're going to be selling the 40 put, and I'm going to switch our long put to 38. Why am I also buying the 38 put? I want a risk-defined trade. Buying the 38 put defines my risk on the position. That way, I know what my worst-case scenario is up front. Still gives me a nice profit potential. Gives me 5 ways of making money on the trade, which I'll talk about in just a moment. It does so in a safer way. In this type of a market, I much prefer to be in risk-defined positions personally. If you can collect 53 cents on the spread, which is the current price of the spread, if we collect $53 per spread, that is the most I can make on the position. I would be risking $147 per spread. That's my maximum loss. Again, not tying up a ton of capital, less than $150. You can certainly put this on with multiple spreads and increase your position size if you've got the account size. That can handle it. Not a problem at all. My break-even point's at $39.47. That break-even point is calculated by taking my 40 put that I'm selling. We're going to subtract the 53 cents from that strike price, and that gives me my break-even at $39.47. Let's talk about the directional side first. I don't care if Citigroup moves up, down, or sideways. As long as it stays above $39.47, we can make money. The current price of the stock's at $41.85. Okay, we've got over $2 of cushion where I can be dead wrong and Citigroup can continue to move lower and I still make money. The only move that hurts me is a big move lower, which I'm not expecting because Citigroup is already oversold. All right, so we make money if the stock moves up, down, or sideways. I also make money as volatility decreases, if it does, which it should if the stock decides to rally. I also make money as time decay adds up as well. Every day that passes, that helps me. So those are the 5 ways of making money that we have on the trade. The only way I can book my entire $53 of profit is if I hold all the way to expiration. That's really not what I want to do. My target zone on this is when I can buy the spread back and keep between 50 and 75% of my max profit. If 53 cents or $53 per spread is my max profit, ideally, I would like to buy this thing back for right around 13 cents, between 13 and 26 cents would give me that desired profit range. I have my closing order working at 13 cents. So anytime over the next 23 days, if this spread trades for 13 cents, I'm going to be filled and I don't have to sit there and watch it all day, every day. So it's a neutral to bullish position. Just an example of how you can take advantage of some of these oversold conditions. You can repeat this process on JP Morgan, Bank of America, some of the energy names. A lot of opportunity on these oversold names. I don't want to just buy long calls here. Again, guys, that's just too aggressive given the overall market. I'm not opposed to buying calls and puts. It's a big part of what we do. In fact, we've closed out of a number of long calls and long puts here this week. It's just that you want to make sure you have the diversification. You want to mix your trade types. And if you're not doing that, you're missing out on a huge piece of the puzzle. You really want to implement those vertical spreads into your trading as quickly as possible. All right. So if you have any questions on any of the trades that we talked about, any of the charts that we talked about today, feel free to post a comment here on the video, post a comment in the blog, or send me an email directly. Mike@netpicks.com is the email address. So let's see what happens. Let's see if we can get any type of a bounce here the next couple of days. If we don't, again, it could be a quick move down to the 200 period moving average on SPY. I do expect it to be an active end of the week, and we'll see what happens. So I'm going to wrap this video up here. I will be back on Friday for our weekly recap session. We do try to do those live, so we'd love to have you join us here. We'll do it on Friday at 12 o'clock Eastern. All right, so enjoy the rest of your day, everybody. We'll talk to you here on Friday.